On this video, we will be looking at the candlesticks. Remember, I said I will make a live video where I show you this candlestick on the market. So in this video, I will be explaining and showing you how this candlesticks wins and how this candlesticks lose. So the candlestick that we are looking at now is a dragonfly doji. It's a dragonfly doji. I said it's a bullish candlestick. Whenever you see this candlestick, you should expect the market to push up. So as you scroll through this chart, you can see a lot of candlestick patterns, For example, we have this pin bar, we have a pin bar, we have a shooting star, we have a pin bar, we have a bullish engulfing, we have a doji cross, we have a dragon doji. So this dragon doji basically tells us that the market is about to push up. If the market is about to push up, we are looking for buying opportunities. But these candlesticks do fail, especially when you are greedy. Look how this market pushed up. It pushed up for like 1 hour, 2 hour, 3 hour, 4 hour, and if you are greedy, on the 5th hour it will have reversed with you. But if you are not greedy, you would have taken some profit, because after pushing up it reversed here. But the good part is that when it got here, it showed us another doji cross. I said it means the price can go up or the price can go down, and as you can see, the price did go up, and you'd have made some more profits again. And then we had this shooting star or inverted hammer, and I said the inverted hammer or a shooting star means that the price might push down, and as you can see, the price pushed down. But we have another inverted hammer here that failed, because these candlesticks, they fail at times. And we have this hammer, it pushed up. So these candlesticks, they do work, but you should use them carefully, remembering that nothing always wins. So let's look at the doji cross. You see here is the doji cross. I said the doji cross can mean that the price can push up, can push down, or it can push up. And you can see on this scenario, it pushed down, and then also on this scenario it pushed up. On this scenario it pushed up a bit. So it depends on where you get these candlesticks formations. And then here we have a pin bar. It's a candlestick that is called pin bar. And then here we have the hammer, and you see the pin bar pushed up and the hammer pushed it down. So you need to have a way to use these candlesticks with the winning strategy. You must make sure that every time you are using these candlesticks, you win more and you lose less, because they do lose at times. As you can see here, we have it's a hammer, or some can say a pin bar, and you can see that it pushed the price up. So these candlesticks, they do work. And then here we have a dragonfly doji. You remember I said a dragonfly doji pushes the price up. You see the price consolidated a bit and then started pushing up, and if you had entered this trade, you would have made some profit. And then we have a shooting star, but this shooting star failed, because these candlesticks, they do fail. You remember I said a shooting star means that the price was coming and then it pushes up. But on this one, this shooting star, the price came from above and then it reversed. So it did the exact opposite of the theory. That's where the hedge funders come in. That's where the hedge funds come in, where they just manipulate and trap retail traders. So we had a shooting star. Here is another shooting star. Here is another shooting star. A shooting star, and it has to push the price down. But on this instant, it didn't push the price immediately. It went and formed another shooting star, and then it started pushing the price down. So you can have a strategy with a set of rules on how to use these formations. Look at here, we have a hammer which was confirmed by another hammer, and look how many or how much profit was made from this trade. Look how the price pushed up on this trade. Look how the price pushed up. So you need to know this candlestick. You need to develop an eye to see this candlestick. Here we have a gravestone doji. Remember I said a gravestone doji means that the price was going up and then it should go down, and the price did exactly that. It was coming up, and then when this candlestick formed, it started pushing down. So here we have a shooting star that confirmed this gravestone doji and pushed the price down, and we also have another cross doji that pushed the price to the downside. So you must really develop an eye for this candlesticks. Here is the shooting star that pushed the price down. We have another shooting star, it pushed the price down. We have a dragon. We have a what is this? Is the gravestone doji that was supposed to push the price to the downside, but it failed, because these patterns, they do fail. They don't always pass. No, they do fail at times. And then we have a dragonfly doji that failed, but if you were patient enough and had a wide stop loss, you would have made some profit, because eventually it pushed up. A dragonfly. And then on this chart we have the bearish engulfing. This candle opened, but this candle opened and closed. It formed the market formed a bigger candlestick, and I said when the market does this, we are looking for selling opportunities. Also here is a bearish engulfing. This candle is smaller than this one. We are looking for selling opportunities. So you must really develop this an eye for this, because you can have a strategy. Say maybe you are trading support and resistance, and you are looking to find this level, these candlesticks on our support and resistance. Here is our shooting star. You see, they come in different sizes. They do not come in one size. They come in different sizes, and sometimes they work well, sometimes they fail. They work well. This time it failed. It worked well. So let's see, if you were trading, you would have failed one, you would have failed two, you would pass. So you would have failed 2 trades and passed 3 strong trades. So we need to know this candlestick. Here's another bullish engulfing pattern. Bullish engulfing pattern means that this candlestick is smaller than this. The price should go up, but you see that this one failed, but again it formed another one here. It formed another bullish engulfing pattern. This candlestick body is smaller than this body, so this body is bigger, and the price should or is likely to go up. And then here we have a pin bar that confirmed and continued to push the price to the upside. Here is another bearish engulfing. This candlestick is smaller than this one. That means the price should push to the lower side. Again, here is another one pushing to the lower side. Bearish, it's a bearish engulfing pattern. And then we have the hammer. You see the hammer, and I said the hammer, if the price is coming down and gives you the hammer, you're expecting a push to the upside. A hammer. Draw these candlesticks on the wall next to your trading PC. Know them. Each and every time you're analyzing or checking the chart, you will be looking for these formations. Here is another bullish engulfing. that goes with the hammer. So this is the hammer and this is the candle bigger than the hammer, closing, and it's bigger than the hammer. We are looking for the price to push up. As I was saying, you can just draw these candlesticks somewhere on the wall on your house and just look at them each and every time you're about to enter the market. Just look, find a confirmation, a candlestick confirmation. Here is a gravestone doji. Okay, this one is a dragonfly, this one is a cross doji, and this one is a dragonfly doji. So a cross doji, it pushed down, a dragonfly pushed up, and then we had another dragonfly that pushed up. So you see, sometimes these candlesticks, they can be profitable. They can be very, very, very profitable. Here is a bearish engulfing pattern. We have a shooting star, and this candle is this candle next to this shooting star is bigger than the shooting star, the body, and then we are expecting the price to push down. So if you are not greedy, you would have caught some money, but if you are greedy, you would have stayed, and then the market would have reversed with you, right? And it formed a bullish engulfing pattern here that confirmed that the price is about to go to the upper side. And then here I'm just trying to show you that these candlesticks, they do form almost each and every week. As you can see, this is a daily time frame, and we have a doji, we have a doji, we have a doji, we have a doji, we have a doji. So each and every week we see a doji, and if you know how to use these dojis, you can capitalize and you can be profitable. You can build a strategy, around these candlesticks, and it can be profitable if you are using it correctly and you are not greedy. And here we have a shooting star and the inverted hammer. We have an inverted hammer that failed because it had to push down, right? And then we had a pin bar here that passed, and then we have a shooting star that passed and the hammer that passed. So as I'm saying, you can develop a strategy around this, but you have to be patient and have strict rules when you are trading this. This is a gravestone, and it did well, but after a few minutes it went up, a few hours it went up, and then it started going down. You would have made some real profits if you were trading with this method. If you were trading with this method. So I hope you saw these candlesticks, and please continue checking them by your own. Train your eyes to see these candlesticks and understand by yourself that these candlesticks can assist you, they can help you, and you can develop a strategy. After I teach you trend line, I teach you support and resistance, and then you can combine that information with these candlesticks, and it can be a profitable strategy. So thank you for watching up to this very end, and thank you for being part of this course. We shall meet on the next video.